Evening, everyone. This is Mayuresh Joshi, Head of Research at MarketSmith, India. Now, as India celebrated its 77th Republic Day a couple of days back, a very interesting event took place, which was expected. But I think the mother of all deals, the FTA with the European zone, yeah, got finalized. And therefore, I think coinciding with the Republic Day celebrations was double celebrations in terms of the EU deal getting finalized. Now, why is it important? Structurally, I think what Trump is trying to do in terms of tariff impositions across the globe, at this juncture, we saw that there was a intensive political bid for Greenland. First, the expectations of some military force being used, and then tariffs being applied to a few European nations. On top of that, he's applied a 25% tariff on the 15% tariff to South Korea because they are not proceeding with the deal arranged earlier on expected lines. And therefore, I think the US trade deal, which has been a focal point from a market perspective, I think the EU deal becomes a very, very important facet and aspect. It covers the European zone in India, which covers almost 25% of the global GDP. And therefore, I think it's not inappropriate to call this the mother of all deals, as has been reported widely into the media. So we carried a special report, a very terse one, in which we have briefly explained how these deals affects key sectors. And therefore, let me take you directly in terms of what that report is probably expected to bring about changes in terms of the Indian markets itself. Now, I think with tariffs in the US ranging anywhere between 25 to 50% the India-EU FTA deals targets zero duties on almost 90 to 95% of the goods over a period of time. Why is it important? It is important for sectors like textiles, apparel, leather, marine products, chemicals, because we were getting taxed in the Eurozone compared to other economies, both developing as well as our neighbors to a large extent, which was impacting our competitiveness. And therefore, I think the kind of export numbers in terms of both volume and value, which should have come out of the Eurozone, were simply not coming off. And therefore, I think with tariff cuts which are expected on all these sectors put together, a large part of the expectation pool is that there will be significant amount of value creation that probably happens. When it probably comes to service, which you've pointed out in point two, the IT sector can dominate because it contributes more than 50% of India's GDP, as we all know, and 40% of exports. And therefore, I think with firms already deriving 30 to 35% revenues from Europe, a large part of diversification with IT companies benefiting should probably take place. There is some element of issues as far as automotive companies are concerned, because I think these companies were getting 100 to 150% duty imposition along with wines and spirits. And therefore, I think if those elements or those duties start coming down, expectations is that there might be competition intensity happening in all these sectors and certain stocks within both these sectors, which are enjoying a large part of the domestic premium. I think that might actually start going down. And therefore, I think a large part of what might come through in terms of this trade deal is going to benefit India. It also offsets the kind of impact from the US trade deal that is expected to happen, and it cushions Indian exports to a large extent. What the budget will announce in the next 3 days, it's support for the export sectors, just to bridge that gap till this becomes a fructification over the next few months. Will be very interesting to watch. So to read this report, follow us at marketsmithindia.com, and for learning, many more learning articles which we post almost on a daily and a weekly basis, follow us at marketsmithindia.com as well. Thank you very much.